Hey, everybody. We're going to talk about one of my favorite stocks and one of my biggest stock positions that I haven't talked about in a while. It's General Motors, GM. Before we dive in, please take a minute and check out fool.com/Frankel, the link you see on your screen. You get the top 10 stocks to buy right now from my sponsor, The Motley Fool. It's the best way to support this work I'm doing. Again, that is fool.com/Frankel. So, GM reported earnings, and to put it mildly, they came in significantly higher than expected on both the top and the bottom line. Earnings came in at $2.62 per share. That was significantly higher than the $2.15 the market was expecting. On revenue, $43 billion of revenue was more than a billion greater than expectations. It was GM's best first quarter revenue ever. And not only that, but it gained market share. Its market share rose by 0.3% in the U.S. retail market, which that's significant. Net income was up 24% year over year. U.S. retail sales gained 6% year over year, and GM did it without, aggressive incentives or aggressive pricing, at least to the extent that its rivals have had to do. It reiterated that it still plans to sell 200,000 to 300,000 EVs this year, which EVs have been a concern because demand has kind of been slowing down. If you look at what Tesla's stock is doing, you'll see what I'm talking about. It was a 36% quarter over quarter increase in Ultium EV deliveries. Ultium, of course, is GM's proprietary battery platform. And it is kind of making some progress toward relaunching Cruise, the automated driving technology platform that had to pause operations after some unfortunate incidents in the past couple of years. So generally good news. We're going to dive into a little bit of what they shared in their earnings presentation. So I want to go ahead and share my screen. Let me see right here. Okay, perfect. So we can see that. That is just one example of their EVs. And the reason I'm sharing this slide in particular, this is the Cadillac Lyriq. It's doing a great job of bringing new buyers into GM's ecosystem. 50% of the people buying this car are new to GM. 70% are new to the Cadillac brand, but really the big significant thing is that half of the people buying this have never bought a GM vehicle before, and it's bringing them into the ecosystem. GM has the number one brand loyalty, by the way, in the auto industry. So bringing customers into its ecosystem is a great kind of long-term customer relationship builder. So another one is this one, the Equinox EV, just another example. And this could be a significant release when it comes out in the middle of this year. It's not available yet, but this is a car that starts at under $35,000 and it is eligible for the $7,500 tax credit. Over 300 miles of range. It's a really impressive product, especially at that price point. It is the most affordable EV at that range in the market right now. So pretty impressive news on all the EVs. So there's a few others that are being released this year. And as I mentioned, Cruise is getting back on the road. It's doing manual driving tests in Phoenix, kind of tiptoeing back into the waters to make sure the problems that affected the self-driving platform don't happen anymore. Still a big part of the investment thesis. It's just going to take a few years longer than anyone thought. So not a terrible thing. One of the biggest things that we got from the earnings is the guidance. So let me go ahead and share that with you as well. So this is GM's earnings guidance, or for full year guidance, actually. And as you can see, it raised pretty much all of the key metrics on an earnings per share basis. It's now expecting $9 to $10 of earnings per share. Keep in mind, this is about a $45 stock. That range was about $8.50 to $9.50 in their previous guidance. Free cash flow, they raised their guidance by $500 million. Margins look great, and it's really just all around great numbers. Now, this is, in my opinion, GM could be, the best investment opportunity that's just hiding in plain sight. And the reason I say that is its valuation is ridiculously cheap. Now, it is trading for about 77% of its book value, even after the post-earnings pop. It's trading for 6 times trailing 12-month earnings. is trading for 5 times those forward earnings expectations that I mentioned just a minute ago. And it expects, $30 billion of free cash flow in the 2022 to 2024 period cumulative, which is, again, this is about a $50 billion market cap stock. They're buying back shares aggressively. GM's outstanding share count is down 17% in just the past year. That's a pretty aggressive buyback. And the company has tons of cash. It actually has more cash on hand than it has automotive debt. It's a pretty impressive business. They're doing a great job of executing. It's really cheap. It's one of the biggest stock holdings in my own portfolio, and I don't see that changing anytime soon. Now, there are some risks. Obviously, the EV market's something to watch. I mentioned we're seeing Tesla really, take a beating because its EV sales, and it's had to slash prices and things like that. GM hasn't had those problems to that extent yet, but it could happen. There are reasons it trades for such a low earnings multiple. This isn't just a free lunch here, but when you consider some of the risk factors, recession risk, pretty much any, people could stop buying vehicles if if the economic outlook is kind of gloomy. But even with all the risks, it seems like a ridiculously low valuation. There's a lot of people who really don't put any value on Cruise at all. I think it's still a big part of the thesis. I think we're just a few years further away from true vehicle automation than we thought, but that doesn't mean that Cruise doesn't have value. It's still a leader in what it does. It's still one of the most promising autonomous vehicle plays. GM has some pretty deep-pocketed partners on this one, too. They're the majority owner of Cruise, but they're not the only owner. So they have partners who would also love to see it succeed. The EV ramp up is getting very interesting, and the second half of this year should be really interesting with some of those models that I mentioned earlier. I'd love to hear what you guys think about GM. It's one of my biggest stock positions and one that I am continuing to build over time. I'll do my best to respond to every comment individually. And in the meantime, I hope you enjoyed this, and we'll see you next time. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.